You may recall Elon Musk's attempt to buy Twitter. Now, the world's richest person, a well-known sparring partner with authorities over securities laws, is attempting to back out of a $44 billion deal to buy Twitter Incorporated. He's already sent so many letters trying to revoke the agreement, and who knows how many more he'll send. His justification for pulling out of the deal, and we're not going to pretend he truly believes it, isn't looking too good. Stick around to find out everything we know so far. So the thing is, bets have been placed. To sum it up, Elon Musk declared a deal to buy Twitter for $54.20 per share on Thursday, April 14th. Twitter accepted the agreement on April 25th. Then Musk wanted out by July 8th, after which Musk was sued by Twitter. And now we're on our way to Delaware's Chancery Court for a 5-day trial in October to establish who owns Twitter and what happens next. Multiple hedge funds have bought stock, options, or bonds, betting that Musk will lose his trial in Delaware Chancery Court on October 17th. This could be a shining light for a type of hedge fund that has had a difficult year. Event-driven funds, which frequently bet on acquisitions and mergers, have lost 4% on average. Einhorn told investors in a letter last month that the law is clear. He asserted that if it were someone other than Musk, the chances of the buyer backing out of the deal would be much lower than 5%. So what do? The money manager, whose firm purchased Twitter, shares at an average cost of $37.24, brushed aside speculation that the court would rule in Musk's favor to avoid embarrassment if the man with a net worth of more than $250 billion simply ignored his decision. Einhorn believes that the Delaware Chancery Court, the nation's predominant and most highly regarded business court, has an incentive to follow the law and apply it here. But why does he want to back out anyway? The notion that Musk, the CEO of both Tesla Incorporated and SpaceX, might one day own Twitter sprouted in early April. That's when he revealed he'd purchased 9% of the social media powerhouse, making him its largest single shareholder. Within a few weeks, the parties came to an agreement. Musk's pretext is that Twitter is deliberately lying about its user numbers, overcounting bots, and so forth. Peter Mudge Zatko's whistleblower complaint may help his case mildly, but not significantly. Zatko was fired from his position as Twitter's head of security in early 2022. He lodged a whistleblower report in July, alleging that Twitter concealed careless security practices, led astray federal regulators about its safety, and failed to properly determine the number of bots on its platform. He's a long-serving and well-respected member of the hacker and security communities, and his insinuations are sure to have a significant impact both on and off Twitter. Congress, for example, has already stated that it's looking into Zatko's claims. Zatko's disclosure directly states that Twitter fibbed to Musk about its spam and bot metrics, which could be fodder for Musk's concerns about spam bots. Though Zatko's support for those specific allegations appears to be fairly shaky, Twitter, of course, denied all the charges, calling them false narratives. We've been trying hard to take Zatko seriously. It's not easy, but Robert Graham put it into words in the best way possible. Zatko doesn't know how to work in a corporate culture. It was said that employees expect their managers to defend them in workplace disputes. Executives, on the other hand, do not have that luxury. They are at the top of the food chain and are in charge of solving issues. Nobody else to complain to, not the board, which is only focused on outcomes and not HR, because they are above HR. Nobody. You must settle your own disputes. But since he wasn't able to fix his issue with Twitter CEO Parag Agrawal himself, Zatko's complaint appears to be about seeking dispute resolution in the court of public opinion. Now, more on what Zatko has done. In his complaint, Zatko also made a big fuss about Jack Dorsey, the former CEO of Twitter. Now, we're no executive, but if we have an absentee boss, we'd probably just do anything we want to. We're surprised Zatko didn't think of this because one way to put the changes he desired was to run Dorsey over. He could have done so by planning with other Defiant executives or simply by rogue execution. Given that Zatko described Dorsey as a disengaged CEO who hasn't spoken to him in days or weeks, outplaying him should have been easy, no? Matter of fact, the more we believe that the current Twitter CEO, Parag Agrawal, had a point about Zatko's poor leadership, which Agrawal referenced as one of the factors of Zatko's sacking. And we're not alone. Twitter shares closed up 2% after Zatko's testimony that day, which may not seem like much until you consider how much the rest of the stock market dropped. And it looks like even investors have dismissed Zatko's complaints. Musk's claims about bots and fake profiles don't really square with Zatko's feelings on Twitter's measurements of potentially profitable users. But there is a silver lining for Musk here. That is, aside from the Zatko-related shareholder lawsuit, he tweeted a link to the Tesla merch store where a cyber whistle could be ordered for 1,000 Dogecoin. The cyber whistle is since out of stock, and Tesla is apparently many Dogecoin richer. But what are Elon's lawyers doing for him? As seen by Twitter, they're not following the discovery process. Twitter claimed in a filing that the billionaire did not provide texts he and his family office manager, Jared Birchall, exchanged. changed. Burchell, aka James Brickhouse, may sound familiar from Musk's 2019 defamation trial. He joined a non-disclosure agreement with a con artist, promising to dig up some dirt on the caver that Elon had called a pedo guy, and he also procured the URL justballs.com for him. Twitter claims it is aware of the messages between Musk and Burchell because they were provided by third parties. Twitter's lawyers wrote, "Defendants have refused to explain this discovery failure. Either the documents were improperly destroyed or improperly withheld." There were also text messages exchanged between Elon and his banker, Michael Grimes. And no, they're not related, but these messages apparently included Musk asking the banker to slow down because there wouldn't be any point buying Twitter in the middle of World War III. But these were sent after a merger agreement was already signed. In response, Musk's lawyers claimed that not turning over all the text was a little accident, after which they complained about Twitter's tone. There's even a serious righteous footnote on being too harsh on other lawyers being unethical. The lawyers point out some problems with Twitter's production of other paperwork before complaining that Twitter's premature motion and overheated rhetoric are intended to divert attention from Twitter's own failures. Besides that, Musk's team claims that those messages were ultimately produced. The real issue was the timeline, which was far too fast, and Twitter's lawyers, who were simply too nasty. Why did he want to buy Twitter in the first place? Musk is a very wealthy man. As a result, he would naturally specify that he is not interested in purchasing Twitter to make some money. He sees Twitter as the de facto town square and wants the social networking company's algorithm to be open source. He tried to portray the entire takeover bid as a quest to protect free speech. Even Musk, a staunch supporter of free speech, must persuade shareholders that his takeover bid is in their best interests financially. Otherwise, what exactly are we doing here? Musk was on stage in Vancouver just hours after declaring his bid to buy Twitter for a well-timed interview with TED Talks founder Chris Anderson. Musk mentioned his obsession with the truth during the dialogue, echoing remarks he made in his SEC filing about wanting to safeguard free speech and democracy. He may be in for a rude awakening if he is successful in actually buying Twitter. However, as Audie Robertson pointed out, his awareness of free speech appears hazy at best. She deduced that Musk may be in for a nasty shock if he succeeds in purchasing the social media platform based on Musk's comments and previous efforts by Twitter's leadership to deal with speech laws around the world. We don't blame hedge fund managers that are betting the billionaire will be forced to buy Twitter. We do, however, enjoy the drama. One of the hedge fund managers placing a bet against Musk is David Einhorn, who was once shipped a set of shorts after declaring his intention to short Tesla. This was not Musk's idea. It was a brand promo from a business selling shorts with a 5.5-inch inseam. Musk, in contrast, has avoided having his emails discovered, which is a major victory for him and a massive loss for people who enjoy reading other people's emails. Guilty! Perhaps he will be forced to purchase Twitter, but it's true that consequences of his actions tend to slip right off his back. The SEC has been unable to hold him accountable. Neither has NASA. Neither has the National Labor Relations Board, which instructed him to remove a tweet that remains online. Why should the Delaware Court of Chancery differ? That's a wrap for this video. What are you betting on? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one. Thanks for watching.